Okay, listen up. We've got a massive capital signal flashing on the radar coming straight out of Asia. And our mission right now is to decode what I'm calling the Micron effect before the US market opens and, well, the real battle begins.
Look, the headlines, they're just feeding you noise. A modest 0.5% gain in Korea. You need to ignore that. The real signal, the one I'm tracking, is buried in the data. We're talking about 1 trillion won, that's almost $1 billion. And it wasn't just invested, no. It was deployed with surgical precision, straight into one sector. Now that is not your average retail buying. That, my friends, is a coordinated.
So here's the raw intel. Yeah, the KOSPI is green, but what you should be noticing is that the KOSDAQ is basically flat. Foreign capital is actually leaving the smaller tech names. That's a classic diversion. The two data points that really matter are right here. That 1 trillion won foreign buy into the KOSDAQ and this, the sharp drop in the US dollar to Korean won exchange rate. Trust me, these aren't separate events. They're the two keys that unlock this entire operation. So there's our anomaly. Now the investigation begins. We are going to follow the money. Trail it from the initial signal that blinked in the US session right through to the algorithms that executed the trade in Asia. Let's break down the mechanics of how this all went down. Here it is. This is our trigger. This wasn't some random market blip. The fuse was lit the moment Micron hit an all-time high in the US market. You see, that gave the big institutions all the validation they needed. It was a green light, confirming that the demand for AI memory, it's not slowing down. And that right there was the starting gun for Asia.
And once that gun went off, it set off a chain reaction. First, Micron surges. That signal zips across the Pacific. Then SK Hynix, a key supplier in the memory supply chain, rallies right at the Korean Open. But the real accelerate, the thing that poured fuel on the fire, was the currency move. The dollar's sudden weakness against the won triggered algorithmic buying on a massive scale.
So why did that happen? Well, it all comes down to a key tactical advantage, FX gain. For a big foreign fund, this is what we call the double dip. It's brilliant, really. They don't just profit from the stock's price going up. When the Korean won strengthens against their home currency, their entire position just becomes more valuable. It's like a powerful 2-for-1 kill shot. So the crucial point to understand is this. That 13-1 drop in the exchange rate wasn't just some boring currency fluctuation. No way. It was a massive, flashing buy signal. It effectively opened a discount window for foreign capital, making these Korean blue chip stocks instantly cheaper and way more profitable. The algorithms, which are hardwired to spot this exact kind of arbitrage, they just executed, without hesitation. And that is where our trillion won came from.
Okay, so we've dissected the cause, we know how it happened, now we pivot to the effect. The signal from Asia has set the stage for the US session tonight. So here is the battle plan. These are the key levels for both the bulls and the bears.
The intel coming out of the Asian theater is, well, it's unambiguous. This 1 trillion won deployment is a high conviction bet. It's a statement that the AI semiconductor cycle is far from over. They've positioned themselves for continuation. Now, the question is, will Wall Street confirm the signal? And this leaves us with two very clear opposing scenarios for tonight. The bull case, well, it's that the signal is real. The trend gets confirmed, and this rally starts to broaden out beyond just the hardware makers like NVIDIA and into AI software companies. But then there's the bear case, and that's the idea that this was all a technical illusion, a sophisticated trap driven by temporary currency flows, designed to squeeze out anyone shorting the market before a big reversal. For the bull case to stay alive, they absolutely must defend this line. We're talking 24,240 on the NASDAQ 100 futures. Think of it as their forward operating base. As long as they can hold this level on a closing basis, they maintain control of the entire narrative. On the other side of the battlefield, the bears have their own target, and that number is 23,850. If they can push the market below this level, especially with high volume, they will have breached the bulls' defenses. That would invalidate the signal from Asia and pretty much confirm that today's move was, in fact, a trap. These two numbers, they define the entire battlefield tonight. All right, let's transition to the final phase, actionable intel. We've analyzed the situation, and now we prepare for execution. This is your tactical cheat sheet for navigating the trading session ahead. So this is our watch list. We are monitoring the cycle leaders in hardware, your NVIDIAs, Microns, Broadcoms, to see if they can keep this momentum going. But at the same time, we're watching for confirmation in AI software. Think Microsoft, Palantir. If we see strength there, that's a huge sign the rally is broadening, which would confirm the whole bull thesis. Now, for the rules of engagement. Number 1, keep your eyes locked on that 23,850 breach point. A high volume break below that is a crystal clear signal to abort any long positions and reassess the situation. And number 2, discipline is everything. Do not chase the initial price move at the open. Let the market show its hand. Wait for that first 30-minute candle to close and confirm a direction before you even think about committing capital. And that all leaves us with the ultimate question for tonight, doesn't it? Was that trillion-won signal the opening shot of a new supercycle in AI? Or was it all just a complex currency-driven short covering trap? The battle for control begins now. Stay frosty.